financial accounting, we're talking about the income statement and stockholders' equity. Now, we're going to look at the income statement in its full glory. And how I remember this is I have something called the Ode to ODEC. And the Ode to ODEC says that the first thing that you disclose on your full income statement is income from operations. The second thing, which is the O, the second thing that you disclose is your income, your losses from discontinued operations. In other words, when you stop doing a business or you put the for sale sign out in front of property, plant, or equipment, or you sell off a division, as soon as you make that announcement, those are operations you're going to discontinue, and you don't keep them up in the top part of operating income. You put it down in discontinued. If you have any gains or losses from this discontinued operations when you ultimately sell it or dispose of it, it also shows up in the D, discontinued operations, and that's shown net of tax. The next one is called E for extraordinary items. Extraordinary items have to be highly unusual and non-recurring, and you need to be able to figure out how much it is. So extraordinary items, again, net of tax. And the final one is C, changes in accounting principles. So if you change from one method to another with the blessing of the Securities and Exchange Commission, you have to disclose that change, of course, net of tax, before you finally get to net income. So ODEC, operations, discontinued operations, extraordinary items, changes in accounting principle are now all involved to come up with that bottom line known as net income. So we're going to take a look at problem 7, and in problem 7 they give you a whole bunch of information, A through F, and say put this in the right order. So the first thing that I know in any income statement is sales. So sales in this problem are $1,800,000. The next thing that I know happens is cost of goods sold. And cost of goods sold in this problem is $840,000. Now sales minus cost of goods sold gives me gross margin. And gross margin, so I'm doing a multi-step income statement, is $960,000. After that, we know we put our operating expenses. And there's two kinds of operating expenses in this problem. There's selling expenses of $160,000, and there's administrative expenses of $180,000. So when I look at this, the total operating expenses we have are $340,000. Time for subtotal. Do you remember what that is? That is income from continuing operations before tax. And $960,000 minus $340,000 is $620,000. So that's my income from continuing operations before tax. Our tax then is subtracted, and the tax would be $210,000. So our income from continuing operations before discontinued, extraordinary, or changes in accounting principle, income before, in this problem we have extraordinary items. So income before extraordinary items is $410,000. The extraordinary item we have is we have an extraordinary loss. And that extraordinary loss has a tax benefit of $72,000. So we have to always disclose the tax ramifications, net of tax. And so that's what that is. So overall, the extraordinary loss, net of tax, is $120,000. So that means the bottom line, net income, is going to be $290,000 for this company. Now, on an income statement, not only do we have to disclose the income statement, but we also have to say what are these key subtotals as far as one share of stock. And that's called earnings per share. And we've talked briefly about that before. But earnings per share says we take the main subtotals, like income from continuing operations, which is $410,000, and we're going to divide that by the number of shares. Now, fortunately, in this problem, they tell you the number of weighted average common shares, which is 100,000. So what does the first disclosure for earnings per share be? It's $4.10. So if you have one share of stock, your income before extraordinary items, in other words, from continuing operations, is $410,000 divided by 100,000 shares, or $4.10 a share. The second thing you have to show is the extraordinary item. 120,000 was the loss, 100,000 shares. So for each share of stock, that has an impact of $1.20. So finally, the last thing we would look at is what is our net income per share, or our earnings per share, and that's the 290,000 divided by the 100,000 means that each share of stock is basically earning $2.90.